everyone and welcome to our channel. This side Supriya on behalf of PropertyWala.com, and today we are going to discuss about a very interesting topic, that is REITs, also known as REITs, full formed as Real Estate Investment Trust. So in this video we will discuss about what is REITs, what are the benefits of REITs, what are the features of REITs, how you guys can invest in REITs, and what are the limitations. So let's get started. Before going any further, let's talk about REITs or REITs. So, Real Estate Investment Trusts are the companies that own, operate or finance income generating real estates. REITs are derived from mutual funds. It can be a great way for investors to pool their capital. REITs makes it possible for investors to earn dividends from real estate investments without worrying about having to buy, finance or manage any properties themselves. Let's understand the features of REITs. So all REITs should have at least 100 shareholders or investors, and none of them can hold more than 50% of the shares. A REIT must invest at least 75% of its assets in cash, treasuries or real estate according to the SEBI regulation. REITs must pay shareholders dividends that are at least 90% of their taxable income. Investors can get monthly dividends or interest payouts, providing consistent income, while also receiving capital gains through the sale of REIT units on stock exchanges. REITs trades on public markets. They are simple to buy and sell, which helps to offset some of the traditional real estate disadvantages. But before discussing the limitations of REITs, let's talk about the advantages of REITs. So the first one is liquidity. Most of the REITs trades on public stock exchanges, which are easy to buy and sell, which adds to their liquidity aspect. Diversification. REITs allow their investors to diversify their real estate holdings, as REITs are usually traded on stock exchanges. Balanced dividend income. It is said that investing in REITs can provide substantial dividend income as well as stable capital appreciation to investors over the long term. Transparency. REITs are required to file financial reports that are examined by professionals as they are regulated by the SEBI, which allows investors to be aware of information like taxation, zoning and ownership. This makes the whole process quite transparent. Safety. Investing in REITs make investors acquire risk-adjusted returns and steady cash flow. Now, let's discuss the limitations of REITs. No benefit from tax. The dividends earned from REITs are subject to taxation. So when it comes to tax savings, REITs are not much help. Market-linked risk. REIT is liable to influenced by market movements, and this can be a major risk for investors as they may receive less than they originally paid for their shares if they sell them on public exchange. Low growth expectations. The acknowledgement of capital in the case of REITs is a bit low because they mainly return 90% of what they have invested to the investor, and the rest 10% they reinvest in the ventures. Factors to consider while investing in REITs. Portfolio occupancy percentage. You should find out what percentage of the completed area is rented out. The occupancy rate is a good indicator of the stability and success of the portfolio. Tenant quality and sectoral diversification. A strong tenant is a booming sector like IT, pharma, manufacturing and many more. Matters as that reduces vacancy as well as the risk of paying rentals late. Number of tenants. The large number of tenants, the more diversified you are as an investor. Geographical diversification of portfolio. REITs owning assets in different micro markets or cities is better. Dividend yield. This shows the health of managing entity and the portfolio. Past stock performance. Evaluate past performance and increase in stock price over 1 year, 6 months or 3 months. Growth in revenue and profits of the REIT. There are some big differences due to the accounting treatment of the property. WALE, weighted average lease expiry. This is the average lease tenure remaining for the tenants occupying the building that make up the REIT. Let's talk about the popular REITs in India. First one is Embassy REIT. Embassy REIT owns and operates 42.4 million square foot MSF portfolio of 8 infrastructure like office park, 4 city centers, office buildings. Next one is Brookfield India Real Estate Trust REIT. Brookfield India Real Estate Trust is a commercial real estate vehicle stabilized in India. Properties in Mumbai, Kolkata, and Noida in the NCR, 56% of its total assets are located. Tenants are blue chip companies like Accenture and TCS. Debt is relatively high at 7.15%, which is coming down, and that's good. Mindspace REIT. K. Raheja Corp Group is the sponsor of Mindspace REIT. With a total leasable area of 30.2 m2, it has solid portfolio of office spaces across Mumbai, Pune, Hyderabad and Chennai. Mindspace Business Park REIT, which is sponsored by K. Raheja Corp's Blackstone Group. So each coin has two sides, and REITs have some disadvantages along with the advantages. Investing in REIT can be rewarding, but it is not without risk. It is very important to consult an advisor before investing. So that's all for today's videos. Thank you so much for watching us. For more information, you can visit our website, that is www.propertywala.com, and don't forget to subscribe our channel. Do like this video, share this video, and please comment if you have any doubts or queries regarding the REITs. And there's one more important thing. Before investing in REITs, don't forget to do a thorough research over the social. Thank you so much.